G'day everyone, welcome to this week's newsletter. Hope the new financial year's off to a great start. Look, the pressure of June 30 is certainly behind us now, which is great. We're catching our breath, but certainly not slowing down. The weeks are going to tick by pretty quickly, and we'll be talking about Christmas before we know it. Been busy this week, really just tidying up a few loose ends with the end of the financial year. A lot of work around payroll, STP, all that type of thing, just making sure that superannuation obligations are all caught up and up to date as we progress with the new same day super requirements. It's a massive change for employers, and probably one of the biggest things is around the cash flow impacts of the same day super, but just helping clients through that process. So we're shifting our focus from last financial year, obviously, to the current one. Catching up with a lot of clients, just working through that future prosperity process as well. It's always a good time to reflect and also plan ahead for the next 12 months, which is always good. Looking into that, collecting it, updating a lot of important information just to help with decision making and planning into the future. Also been a lot of time invested in AI. One thing that's becoming very clear is that, and one thing we're trying to reiterate is I don't think AI will necessarily replace people, but I suppose the people that don't embrace, or the businesses don't embrace AI, they're probably the ones that are in a bit of danger. I guess the way we're thinking about AI is that realistically, you've got to look at it not like another piece of software that you might be using, such as Xero or something like that to keep the records, but really setting up these AI platforms is like having someone sitting beside you actually completing tasks. So I guess that's where we're probably seeing it. Obviously, still needs a lot of judgment by us of what these things are actually spitting out, but realistically, just how that they can help do certain tasks, help you become more efficient. That's where we're probably seeing that there are going to be a lot of positive benefits. There's a lot happening on the political scene. It's pretty hard not to sort of get caught up in all that at the moment, but you've got to be a little bit careful you don't start going down these rabbit holes. But it's just important to keep informed, I guess, but don't become too distracted if you can avoid it. There's plenty of stuff that we can't control, and it is frustrating. On one hand, we're sort of seeing how the ATO are carrying on with putting a lot of pressure on businesses to collect, tax payments and so forth. And on the other hand, you're sort of hearing how these politicians are wasting a lot of money. So, it is frustrating, but, it's a lot of this we can't control, I guess, and that's probably the challenging bit of, just trying to really focus on those things that you can control, building that stronger business, creating, that business that's resilient and can continue on. This week's articles, put together 3 articles covering some big issues currently affecting family businesses. The first ones are all the main tax changes for this current financial year that kicked in from the 1st of July. So have a read of that one. So it just really highlights a lot of change that probably hasn't been in the headlines due to all these other budget things going on. We've got another one there with the small business concessions. So just have a bit of a read of that one. Look, we keep talking about these CGT concessions because they are amazing. And if you can utilise them now, I'd highly recommend looking into that. If nothing else, just be very aware. There's a third article there around negative gearing and what the changes mean, particularly for property investors as much as anything. So have a read through those. Before I go, the start of the new financial year, as I touched on earlier, perfect opportunity to pause, step back and ask yourself the very simple question, where do you want to be in 12 months' time? So I guess what we're trying to do here at Future Accounting is through our future prosperity process, just help clients collate that information. Compliance work, preparing financials, tax returns, very important, but that really provides that information for the foundation to really use for better planning purposes. And, as we know with the federal budget, the next 12, 24 months is critical to look at your structures, understand, do I have to make changes, give yourself plenty of time. We'll be talking to you about that. That future prosperity process is critical in that process because it brings everything together and looks at your scenario all in one spot. So anyhow, have a great weekend and we'll catch up again next week.